Hello everyone, here is the answer to exercise 4 from Unit 1 in AC201. In this exercise, we need to prepare closing entries and ultimately a post-closing trial balance. Well, how are we going to do that? We're going to start with the information that we had on our adjusted trial balance. You may have actual financials prepared at this point. You should before you close, but for this exercise, the adjusted trial balance is going to work just fine. So to prepare our closing entries, we need to know what to close. Some accounts are, as they call, temporary. Their whole purpose is to track something over a period of time. So what accounts are temporary? Well, it's always the same three account types. It is your withdrawals, your revenues, and your expenses, because all these accounts aren't how much have we had ever, they're how much of this happened during the period. How much did we withdraw to pay to our owners in the form of dividends over the period? How much revenue did we bring in over the period? What were our expenses over the period? And since their only purpose is to track over that period, at the end of the period you have to prepare them for the next period, which means you got to reduce them back down to zero. There's a lot of different ways to close your accounts. I'm going to have you guys in this exercise do the income summary method. And the first entry using this income summary method is going to close your revenues. So we have one revenue account. It is sales revenue. And as we see on our adjusted trial balance, sales revenue has a credit balance of $52,000. Well, we got to reduce that to zero to prepare it for the next period. How do you reduce an account with a $52,000 credit balance down to zero? You debit it for the same amount. So we're going to debit sales revenue for the same exact amount that we had a credit balance for. And we're using the income summary method. So the other end of this journal entry is going to go to income summary. We're going to credit income summary for $52,000. Income summary is a transitional account. It only exists for these closing entries. We're in fact going to close that as well later, so it doesn't have an account type. We're just going to use it here so we have something to close these revenues to. The second entry is going to close our expenses. They're also temporary. All of our expenses had a debit balance, as they should, on our adjusted trial balance. Well, how do we get them to zero? We have to credit for the same amount. And since we need something on the other side, your debits have to equal your credits. What are we going to use? We're going to use that transitional account again, income summary. So we're going to debit income summary for an amount equal to our total expenses. In this case, we have 5 expenses: cost of goods sold, salaries expense, utilities expense, depreciation expense, and bad debt expense. To reduce them all to zero, we're going to credit them for whatever their respective debit balance is in our second closing entry, which is our entry to close expenses for October. In our third closing entry, we're going to close that income summary account that we just used to close our revenues and our expenses. Well, what does our income summary T look like right now? In the entry to close revenues, we credited income summary for $52,000. In the entry to close our expenses, we debited income summary for $36,800, which means our income summary account has a credit balance right now of $15,200. Anytime you had more revenues than expenses, this should always have a credit balance. We had more revenues than expenses. We have a credit balance. But this is temporary. We have to reduce it down to zero. How are we going to do that? The same thing we did before. If it's got a $15,200 credit balance, let's debit it for that same amount. So we're going to debit income summary for $15,200. What are we going to close it to? You always close income summary to retained earnings. So we're going to debit income summary for its current balance of $15,200. We're going to credit retained earnings for $15,200 in our third closing entry, which is the closing entry to close income summary to our retained earnings account. And after we do so, with that $15,200 debit, you can see that the balance of our income summary account is reduced to zero, which is what we want. It's temporary, so it's at zero. Nothing's in it. It's ready to be used when we have to close entries again at the end of the next month. So we've closed revenues, we've closed expenses, and we've even closed this income summary account. What is left to close? And that is our withdrawal accounts. And in this case, our withdrawal account is cash dividends, money withdrawn from the business to give to our owners. It has a debit balance of $2,000 according to our adjusted trial balance. Well, how do we close it? We got to credit it for that same amount. And just like income summary, you always have to close cash dividends to your retained earnings account. So we're going to debit retained earnings for $2,000 because our debits have to equal our credits, and we're going to credit cash dividends for $2,000 in this entry to close our retained earnings. And then next up, we need to prepare our post-closing trial balance. Well, all of our temporary accounts are zero now, right? Our revenues, expenses, and withdrawals are all reduced to zero. So what do we have to carry over to our post-closing trial balance? How about our assets, our liabilities, and all of our equity accounts that aren't retained earnings, which in this case is just common stock. So let's just carry our assets, liabilities, and common stock over. And when we add those up on the asset side, we get $168,000 worth of assets. And as you can see here, retained earnings doesn't have the same balance as adjusted trial balance. Why? Where did I get that $39,200 from? Well, that is the balance of retained earnings after we've done our closing entries. See, we started with $26,000, but then in the entry to close income summary, we credited it for $15,200. And then the entry to close cash dividends, we debited retained earnings for $2,000, which means if we add our credits up and subtract out our debit, we're going to have a retained earnings balance of $39,200. But that's okay, because when we add to everything else, we're going to come up with a total of $168,000. And since our debits equal our credits on our post-closing trial balance, we know our books are good to close for the period.